Hello, everyone. Welcome to another panel discussion by Banking Frontiers. My name is Manoj Agrawal, and today I have an esteemed set of panelists with me from the industry, from the financial industry. We're going to talk about global investing and how that is changing, how that is transforming, how Indian organizations are taking advantage of that, how Indian investors can take advantage of that. And we are now in a post-COVID scenario. So obviously things are going to change a lot. And I think this panel is going to throw a lot of light on some of the upcoming changes. So welcome, dear panelists, to this 1 hour panel discussion. May I request each of you to briefly introduce yourself, and then we'll get into the actual panel discussion.
So thank you, Manoj. And it's lovely to be here. My name is Himanshu Gupta. I'm based out of Pune in India, and I am the global COO of Kristal.ai. By background, I've been in investment banking, public markets, and worked across India, Middle East, and Singapore before I got involved and with the founders in terms of getting Kristal.ai off the ground, which is essentially our vision is to create a digital private bank and provide solutions to investors and partners in terms of other banks, advisors, or wealth platforms to essentially create a digital wealth management offering, which is seamless, which is efficient, which can be scaled, and make investments accessible to a much larger section of society than what was previously the case. And of course, in this regard, we focus only on global investing. So again, very excited to be part of this panel and hear from esteemed panelists in their views and exchange views with them. Thank you.
Thank you, Himanshu, for that.
Hi, everyone. This is Amit Gupta. I head the institutional business for SBI Asset Management. SBI Asset Management, as you know, is one of the leading asset managers in India. We have a large presence on the mutual fund as well as the PMS and AIF, which we call alternatives. Our idea on this asset management part is very clear that we want to be the fund manager to every Indian. The endeavor remains to keep on educating our investor, whether on the institutional side or on the retail side, bring the best practices forward, inculcate the habit of investment rather than savings, what we Indians do, and make sure that the financial goals for each and every entity what is there in India, we should be able to provide that. So this is how we are structuring our business, and we are very, very excited about the whole industry and the kind of potential it has, and we still believe that we are into our nascent stages. Just to give a perspective in terms of the assets under management, what we do is roughly 15.5 lakh crore, out of which 9 lakh crore what we are managing is on the alternative side, and 6.5 lakh crore what we are managing on the mutual fund side.
Thank you, Amit.
Myself, great to be on this panel. A quick background of myself. I'm currently the co-chief investment officer of Edelweiss Mutual Fund. I have an investing background spread between India, emerging markets, as well as developed markets over the last close to 25 years. So there are two parts to global investing. One is offering that as a product, and second, as a fund manager, running those products. So I would be coming from an angle of actually investing money in global equities, particularly from an equity standpoint. That's something that I've done over the last 25 years. Finally, I would say that in my current avatar in Edelweiss Mutual Fund, close to about quarter of our equity assets are actually kind of are global in nature, whether it's active or passive, mostly passive. So we do have a meaningful presence with regards to global investing, and would be happy to share some thoughts and learn from the two panelists on this panel as well. Thank you.
Thank you so much.
Thank you. If I'm very happy to be here. My name is Kartik, and I've been part of the industry for last almost 8 to 9 years as a fund manager. I currently serve as a senior fund manager in Shriram Mutual Fund. It happens to be the smallest mutual fund in India today. But as Mr. Amit Gupta was saying, we also happen to be, a group which has, its presence in almost all the smaller towns today in India. So we also happen to have that kind of an aspiration of being an asset manager to the people who need it the most. And this is what our aspiration is. And I've worked in the Edelweiss earlier for a couple of 4-5 years. There is a connection with Mr. Bhattacharya there. Thank you so much for having me on the panel. Thank you.
Thank you, Kartik. Most welcome.
Hi, I'm Lakshmi, and as you all know, Lakshmi means money. If I don't go to people, people come to me. So that's a short introduction of what I am. By profession, I work with Kotak Asset Management. We're the top 5 asset managers in India, managing assets across fixed income, equities, hybrids, and of course, ETFs. We were one of the leaders in launching ETFs back 12-13 years back, when nobody even, people barely knew what ETFs were. And now it's become like a catch name in the industry. While we are India specialists, we do curate global strategies by trying to partner with the best. The advantage we have is that in the top 10 asset managers, we are 100% Indian. So that allows us to wed with multiple partners outside the country and try to get the best global investments to every Indian household. And it's all about money, as they say. So managing trust is something that we really pride ourselves about.
Great, wonderful. Thank you all for that very wonderful introduction. So let's jump into the discussion itself. But what do you see their awareness of what's happening in the finance world outside India compared to their awareness of other things, education, vacation, etc.?
I think if I were to, let's say, recount back over the last 5 years of how the familiarity on the financial side has actually improved, I would probably say that it has improved exponentially versus what it used to be. And of course, the COVID period is a tough one, is an extraordinary one, and I'm excluding that for the purposes of when I'm making that comment. But overall, if I look at whether it's my engineering batchmates who, I mean, these days, of course, everybody has the WhatsApp groups and everybody is well traveled. The discussions that I kind of, particularly in research to your question, I read that, a few topics have particularly been of interest. For instance, pure EV plays, OTT streaming players, artificial intelligence and machine learning players. These are some topics which are of particular interest because people relate to where they work, what they deal with on a day-to-day basis, and hence try to bring to the life in financial markets as to, is there a play that they can play on, because they see this in their own business or in what they do in day-to-day life becoming a meaningful part of their a meaningful part or meaningful aspect of mainstream life going forward. The other thing that I find, having lived abroad for about close to 10 years or so, is that I think the awareness of some of the unique business models that are available globally has kind of improved significantly. Now, I'm sure my co-panelist, Lakshmi, would certainly identify with Louis Vuitton. But overall, that as a listed stock, LVMH, particularly listed in Europe, has been a phenomenal investment. So, aspiring Indians, as you said, the richer class, particularly the well-traveled ones, who understand brands, who understand those unique players which can never be replicated across, do want to express their view in their financial savings as to how do they go about representing that. And I think therein, ultimately, equity investing or a global investing has its strong seeds. And that's something that Edelweiss has probably has gone to slightly earlier. And I think we have a meaningful global offering in that context as well. So something that I see in my current job, having seen in my working life abroad as well as in India over the last decade or so.
Yeah, thank you for that opening with that. Amit, yes, please.
Yeah. So Manoj, I have a different take. So when we speak about financial management, we generally speak, as you rightly mentioned, about only the wealthy class. Now, what the change which has happened over the last couple of years is on the awareness across the investing community, people who have money and were investing only into traditional products. And thanks to the kind of initiative which were taken by the industry player, industry body, in terms of popularizing the whole mutual fund Sahi Hai campaign. So what we are trying to do is, wealthy guys were aware about asset managers and what kind of advantages they provide in terms of managing and providing different strategies. What we need to do is to reach to the true Bharat, where because they are the people who were always having lack of these kind of opportunities. And what we are trying to do as an AMC is to make sure that we are propagating the investment culture to deepen inside the rural areas, semi-urban areas, and making sure that people start differentiating between savings and investment. How do they plan their future goals and all? How do they start investing? And to that extent, if you look at the industry numbers, especially through systematic investment plan and all, I believe we are moving in the right direction. As an industry, we should not only look at top down, we should go bottom up. We should broad base our client as well as the intermediary community, and make sure that investors should have a proper way in terms of approaching their investment. They should be able to differentiate vis-a-vis saving and follow a proper plan. So I believe this is something which, as an as a asset managers, we need to do in this country.
Absolutely right.
So Manoj, a couple of things which I think it's important to register is that the mutual fund industry today has assets under management of close to a little under 40 lakh crores, panning across 11 odd crore folio holders. And I'm not talking about the unique folio holders, I'm talking about the total folio holders. Now, if you come to global investing, and this is why our mutual fund roots, which is fairly popularized, because of mutual funds, IEA campaign and all of that, you see that the total assets under management would probably be $4 to $5 billion, under 30,000 crores. And the total folios, maybe close to about 11 lakh folios, 11.5 lakh. So if you look at it from that landscape, it looks like a very small number. But if you, and maybe 40 odd funds offering, offshore investments, 40 schemes I'm talking about. If you look at this, where we were 1 year back, we were under 5 lakh folios. So yes, it feels good that we have doubled in a very short span of time. But we also need to appreciate that right now, overseas investments are not mainstream as far as Indian households are concerned. It is more at the periphery. It's at the core is still the necessity for having the household participation into Indian equities, which has demonstrated its mettle as a bellwether across time periods if you have longevity in the market. So yes, this is a trend which has clearly picked up. While we are not at the tip of the iceberg, we've not really achieved, we've not really reached, a point where you can say, oh, it's a nirvana period. It's slightly for more evolved investors at the current juncture, specifically the UHNIs, HNIs, where they have realized that they need a diversity quotient into their portfolio within financial asset classes. And as more and more innovation comes in the mutual fund industry with newer strategies, newer offerings, newer underlines, not necessarily equities, you will actually see this cult or this tradition only enhance over the next few years.
That's true. That's true. That's really interesting. Himanshu, if I may ask you, what is your observation, and would you also like to talk about which other countries are you seeing similar trends, like what our panelists have expressed?
So thanks, Manoj. I'm probably going to try and amalgamate some of what my co-panelists have said. And from a Kristal perspective, our focus has always been global investing or dollarized portfolios. And we'd been watching the Indian investment landscape extremely closely. And we introduced Kristal into India about 24 months ago. And to answer your base question, the familiarization with global investing or brand certainly has been huge. And I think it cuts across all stratas of society. And really, the opportunity was in terms of how do you make it more and more accessible without having a misstep in terms of pure access versus advised access. And I think to Trideep's point where he made, the slightly more evolved investors probably looking at, how do I, leverage the fact that a Tesla has possibly, from a stock price perspective, has become a multi-bagger. How do I play that sitting in India? Because I know Tesla, I read about Tesla, I've ridden in a Tesla when I've traveled to where have you, right? And that segregation or the ability to then participate either via the mutual fund in a domestic route, which is building up. And I completely agree with Lakshmi. I don't think we're at the tip of the iceberg, but there's a lot more that can be done in that space. But I also want to bring in terms of a certain section of society that needs a dollarized portfolio. And we draw that inference if you look at the LRS data, right? Out of, let's say, the 18 odd billion that kind of goes out, you find that only a fraction of it is actually going out for investments. A lot of it is covered on tourism, education, gifts to friends, family, so on and so forth. And there's a massive asset liability mismatch, Ravi, if you think about it in the Indian context of a depreciating rupee. So while the awareness is there, to summarize, the ability to invest in terms of sheer size of balance sheet, and there are offerings in India through the mutual fund route or even through smaller stock players, which can, even for $1,000 notional, right, investment value, make it available to clients. And then of course for the HNI and ultra HNI space as well, either from a pure diversification perspective and or from a end case use perspective where you want a dollarized portfolio. To your point in terms of what trends we are seeing outside, very honestly, I think global investing is a mainstay, or dollar investing, I would say. Most capital markets are not necessarily the size of India, barring, let's say, China. And even in China, for various other reasons, there has always been a need to create or have money offshore. So I think from a trend perspective, whether we look at the European region or the Middle Eastern region, and certainly the Americas, right, it's always a question about dollar investing. It's never a question of local versus offshore. So I think in that sense, apart from maybe a few Southeast Asian countries like Malaysia, Indonesia, where there is a propensity to save or invest in local currency, partly because of capital controls, etc., or from a need-based perspective, the trend in being a participant or an investor or even a speculator in the global markets is certainly something that's changing. And education is a key element of it, because all these ecosystems do function differently. And that's been our focus in making it available, but also at the same time educating the stakeholders and end investors in how global investing can be beneficial if indeed it is relevant.
Okay. That's interesting. Thanks for that wider picture. I'd like to go next on to the issue of, the potential growth, the upcoming growth that you can expect from Indian investors into these global markets. And what I'm thinking is, do we need some kind of mutual fund sahi hai, like a global something sahi hai, or do we leave it to the individual investors to figure it out, what kind of portfolio, what kind of risks, what kind of opportunities they want to tap?
Right. Just taking a leaf from where we, in the last point that we were discussing, like Lakshmi pointed out, there we are close to around 28,000 crores in the foreign funds today. But unfortunately, 50% of it is oriented towards US technology, right? Or say close to 40% is US technology. So it is basically, if you look at the industry today, majority of people want to participate in what they are hearing, what they're familiar with. They're familiar with the FANG stocks. They're familiar with the Facebooks, Amazons, Netflix of the world, and that is what they are. And that is what is the part of the media story as well, right? So they hear and feel all these stocks. It's not the GE or the companies like IBM they want to participate in. They are essentially looking at the innovators. And therefore this whole the aspect of investing, and this is common across the wealthier class and not so wealthy class, wherein they are all looking at the way to participate in this innovative story, how to be part of this story. And I think it is here to stay. Now, to exploit in its how do we exploit it as an industry? It remains to be seen, because so far, the industry comes halfway. The investors come halfway, and we meet in the middle because they want FANG stocks. We offer them the FANG stocks. The growth, right? If you look at globally how the industry is growing, it's basically breaking down all the whether it is dollar denominated markets or the not so dollar different currency markets. you break it into different smart betas, and you launch different ETFs based on it. So what prevents us from launching a mid-cap US value today? It's basically, no one wants to play that, right? Everyone wants to play the familiar stocks. That the growth, I think the future growth, therefore, is a huge growth which is possible to come from that side of the story as well.
You mean media and social media are, in a sense, driving the picks that for many of the investors, people are going with familiar brands. So this kind of also reflects on what Warren Buffett says, that he likes to invest in brands that he actually himself buys, that he consumes as a person. So if I'm a consumer of Netflix, maybe I want to invest in Netflix. If of Tesla, then maybe Tesla and so forth. But yes, then you think that opportunities there outside that space as well. Yes. Himanshu, you wanted to add on to that.
Yes, absolutely. In fact, taking a segue from what Kartik mentioned, and I think he kind of hit the nail on the head, right? The people invest in names they know, right? So it's Netflix, Amazon, Google, so on and so forth. LVMH in India today is still probably a well-known brand, but is not necessarily what people invest in. And I think that's where, and to your point in terms of the education element comes extremely key. So at Kristal, we operate as fund managers, but what we do in a country like India is actually trying to shopify the offering in such a way that it gets made available to a variety of stakeholders in the asset wealth management advisory / distribution space. And the shopification is essentially aimed at coming up with a platform that makes or gives the partner the ability to expand their offering. Because I think to Amit's earlier point, right, investing or saving, even in the tier 2, tier 3 cities, and I think Manoj, you alluded to that, there is enough activity around that, right? And to be able to then almost come in with a plug and play solution of not only access, but on an advised basis, right? Whether it takes into a portfolio approach, which is Ray Dalio's asset allocation approach, or an algorithmic based, no bias, no product sell kind of ability as well to actively manage portfolios or even passively manage them, right? To effectively allow investors across different footprints, balance sheet or geography, and help partners, other advisors, other distributors to kind of make it available to them in a very seamless digital format, right? So we are able to today, enable and invest in less than 24 hours. Today, sometimes bank accounts in India take more than 24 hours to open, right? Despite digital KYC, so on and so forth. So a lot of time and effort is going in increasing the inclusiveness, but also bearing in mind that this is a segment which is not very well understood, not only by the end investor, but even by, let's say, intermediaries. And that's why I think, to your point, a mutual fund sahi hai equivalent from a global investing is extremely important. And if I could just maybe make a mention of some of the more recent crypto related headlines that we're seeing in India today, the reality is, as an unregulated asset, you kind see the kind of advertisements that's on television, and really popular names are endorsing it in a way that it's going to either get you out of poverty or it's got 4x 5x return, and it's really alarming, right? As to how something like that in a large market like India can happen, where the regulators watching it and they need to do something about it. Because if I can do a crypto investment for 100 rupees, it is going to attract somebody for whom it is not the right investment. And without an education, it becomes a problem, especially in a mobile friendly country where we possibly have the highest mobile penetration today globally in percentage terms. Mm-hmm. So education is key. Especially around global investing, because the options are different, the ecosystem is different, investor protection is a little different. But I'd say, thankfully, a lot of what maybe we've observed in India through, broker issues and stuff like that in the last few years are things that internationally has happened 10, 15 years ago. And the regulators and the watchdogs over there have taken those elements into account to make it a far more secure investing environment.
Okay, so AMC industry, should the AMC industry, voluntarily widen its base of offerings and not just stick to some of the big brands like Netflix and Tesla and LVMH and whatnot, that anyway have the fancy of individual customers. Should be more should the AMC industry and the banks that work with you have a
If
more
I could just
scientific, have
quickly
a more
respond
rational
to that,
approach?
Manoj, before I allow the co-panelists, I think, yes, thematically that makes sense, right? But I think to what Kartik was saying, if that's not a product or a solution or an alternative that the investor is attracted to, which will be the case without education, right? It is a lot of good money going after bad money kind of a situation, right? So the investment from manufacturers in either expanding the ecosystem or bringing product in needs to come hand in hand with the evolution of the investor, really.
So let's hear from the AMC industry what they feel about playing a righteous role in this. Amit,
Manoj, I will say, the global investing from the Indian household is into the evolution stage. As of now, it is primarily confined to your family offices and ultra HNI investors. And most of them, have exposure abroad, whether to direct investment or through some ETF route or going through fund house side. Fund house side, if I speak about SBI Asset Managers, we are trying to build our capabilities. We launched one fund which was investing into Pioneer US equity fund. We collected a decent amount of 1,000 crore kind of a number with around 50,000 applications. So there is an appetite. People are looking to diversify, especially whenever you have expectations that developed markets are going to do well. Now, what we are trying to do is to build our capabilities not only for US stocks, but as one of my co-panelists mentioned about other geographies also. Maybe Eastern Europe looks very, very attractive at this point in time. Maybe at certain stages when the commodity prices are going up, maybe LATAM can do very well along with Russia. So we are trying to have our analysts who can track different geographies. To that extent, we are putting our analysts into US and different countries so as to build that capability. And yeah, surely, in the days to come, we will try to have some dedicated geography fund or emerging market fund. This is what our aspirations are. But fact of the matter remains, there is a definitive appetite amongst informed investors, especially the ultra HNI and family offices, and we are seeing a trend of diversification amongst them.
Okay. So for what I understand, you're saying it's hedging as well as catching the opportunities.
Obviously, it's a combination of both. Yeah.
Combination.
Yeah. So firstly, when we're talking about investor awareness programs, IAPs, mutual funds IE is part of that. There are two parts to it. One is 1 basis point at the industry level, which is where this mammoth campaign has come about, where you are bringing in familiar faces to get the financial inclusion concept in. As I said, India is one of the largest land of the savers in the world, but the monies are predominantly lying in traditional mode of investment. So that is the joint effort of the industry to get everyone together. So my maid, my driver, your house help should all have not just a Jandan account, but also have maybe a systematic investment plan or goal-based investing. So that is the endeavor. The other 1 basis point is with the mutual fund, where you can do multiple activities on the IIP. So if you like it in SIP, if you like it hybrid, if you like global, you are you're free to promote or get the concept popularized on your own. So I think that is something which there is an industry effort and this effort. In terms of therefore acceptance of these strategies, I would say, as I said, and I'll reiterate, while we're not at the tip of the iceberg, we're not even at the pinnacle point, because incrementally the wealthier lot who are already initiated into the world of finance is realizing that they need to have a diversifier. A, they need to have an asset diversifier, B, a geographical diversifier, and 3, most importantly, they need a currency diversifier. So it is all these 3 blended together that has made global investing very popular. Yes, I do agree both with Himanshu and Kartik, where, whatever, jo dikhta hai, wo bikta hai. So, whatever people see FANG and FANG, ye FANG dasne wala FANG nahi, ye FANG paisa kamane wala FANG hai. So that is making money for the investors. But I must share with, all of you that, Kotak Mutual Fund launched the country's first Asia Pacific ex-Japan REIT fund. Now, REIT is just gaining popularity in India. And we also happened to launch a NASDAQ fund. In fact, there was a gap of about 3 months. The collections in NASDAQ were almost 10 times more the collection in the REIT fund. Of course, and underlying is very different. So as in, when you see mutual fund industry bringing about, which many of us are doing, including the ones in this room, that is when the awareness quotient increases. And through these IAP programs, if the concept is popularized, that, as I said, for some it could be core allocations, but for most of them it's actually the peripheral allocations, and that will obviously be a continuous process, because I know a lot of investors I interact with who do systematic investment plans in global funds. Right or wrong is not the point of debate right now, but that is one of the modus operandi, saying that, over the next 5 years I need this much kitty, so therefore I'm happy to do this as a currency diversifier. So to each his own, the needs are varying, but yes, the more we as an industry jointly talk about it or individually talk about it, it will certainly help aid the cause.
Very interesting. So very interesting several points that you raised. I'd like to shift the discussion a little bit into the risk side. And since these are all of you are predominantly Indian companies, what do you see as your internal understanding of risks around the world? So obviously you will leverage some of the risks that you can get from your partners abroad, but your own internal risk capabilities development, how much does that need to happen? And kind of what do you think about it, so that you can give a better assurance to your customers that yes, you really understand what you are offering them, and not just you are like a reseller of opportunities abroad.
So I would say that I think the global investing, as the panelists were saying, has multiple dimensions where we need to evolve. One is obviously awareness, which you talked about in similar campaign to mutual fund Sahi Hai. Second, I would say, is expertise. I think at the moment, what most of us are offering are basically passive offerings in and around globally. Only one or two active offerings or a few niche places where expertise is there. And it's a function of demand, so both will evolve hand in hand, but there is a certain gap of expertise as well to track these global companies, to sort of generate alpha from them and kind of move on. So we are at the moment passive. Over time, at some point, we will get active as well, investing in these names. That's second. Third would be possibly regulation. In terms of, while in mutual fund platform, you can do that, but in PMS or in alternative platform, still the regulation needs to evolve to kind of make global investing more mainstream. So the regulation also needs to come in, not just with regards to equities, but also multiple asset classes. So that's the third dimension which needs to sort of, improve for global investing to sort of go mainstream. But I think overall, particularly as things are getting increasingly digital, and that is sort of removing a whole bunch of barriers which used to be earlier in terms of awareness. So I'm sort of more hopeful than what we have been in the last 5 years. That overall in future, some of these hoops that I talked about would be crossed over sooner rather than later. Is what I would say. Thanks.
Thank you.
So on the risk piece, like Trideep was correctly mentioning, right now what is happening is that the manufacturers are manufacturing the products, and which are basically the passives, and the assemblers are generally the wealth managers or the HNIs, catering to HNIs who want to pick and choose the assets that they want to give it out to the investor. So the one risk is what is there in the product, what they understand about the product, which lies with the manufacturer. So there is a little risk with the manufacturer, because manufacturer is then having a risk which is reflected in the index, or generally reflected in the index there, right? So it will not be something which is out of the blue. It could be something like a Chinese technology issue. But that risk lies again with the wealth manager who is selecting that asset and giving it to the client. So there are risks. There are plenty of risks in global investment, but so far there have not been active risks. There are more or less been passive risks. So you are exposed to, say, US tech sector in particular. right? And that tech sector is reflective in the Nasdaq particularly, right? So if Nasdaq in the overall goes down, then your asset value goes down. But you are not exposed to, say, Tesla individually in a when you are investing through passives. So that, I think, the risk there is much more controlled when you are coming through a manufacturing route, as opposed to, say, selecting a stock like Himanshu was saying, that why don't I participate in the Tesla run up? There's so many stocks, meme stocks, which are coming up every day now, where people want to participate in that, just like a crypto, similar to what crypto is, right? So that is where the majority of the risk lies, in my opinion, because you don't know what the underlying asset is. And over and above that, there are all the other risks, like the currency risk, the country risk, and so on and so forth. So I think currently the way the industry is progressing is probably we are in the stage where we are in the right stage where the risks are still controlled, in my opinion.
Himanshu, what is your take? Active versus passive, and different geographies, and all those risks.
I think, as Trideep mentioned, right, there's a couple of elements over here. So maybe at least from what I see, right, the big elephant really in the room, figuratively speaking, is the sheer almost absence of regulation for global, right? While the Indian AMC industry has the ability, as Kartik was saying, to provide that exposure in terms of diversification, the risk in that sense for the manufacturer tends to be a little lower, which automatically means the distributors or the advisors who are facing off with the clients need to have a much better understanding, ability of what they can do, what are the do's and don'ts. Now, unfortunately, that element is not very well documented, or leaves a lot for interpretation. So the regulatory element of global investing, whether it's through a INR denominated product or through actually a dollarized portfolio, which gives you the ability to access different instruments, etc., right, needs to be addressed. In terms of the sheer market itself, now we understand that global markets from a market cap perspective are multifold of what the domestic market is, right? The way the market behaves, even if you take North America, which is about 65% of market cap globally, right, operates very differently. And I don't know what the state is today, but when I used to be back in India till 2004, it was a fairly operator-driven market in many senses, right, in terms of investing opportunities. And today, of course, it's more diverse, and the dynamic in terms of market is very different. Internationally, it also functions actually very differently. And we try to do this basis applying our own algorithms that work beautifully for international markets, to come up with active strategies as well. The same algos, when you apply them in the Indian context, come up with very different results. Now, that's because of very core underlying difference, although the basic construct of an algorithm could be either return maximization with a vol control or volatility control and stuff like that. So there are those differences, right? And I think from a risk management perspective, while the basic concepts or theories around risk management will be very similar, the reality of how the market behaves, the financial or the behavioral element of the market, or be it investor or fund manager, is very difficult to capture or replicate in the Indian context. And that is where the offering needs to, or the education needs to be multifold, right? And hence, again, the shopification is not only an access product that we provide. And there's a bunch of, broker-like offerings that people can do and put $5,000 or lesser. The real need is, to be able to guide the investor appropriately, whether it's through a direct or a regular plan. That doesn't matter. That's a commercial decision, right? But really, in being able to bring to the investor something that kind of works with them, that's an all-weather investment solution of sorts. Because the reality is that I think even in the Indian context, majority of the investors aren't looking to churn their portfolios. And the distribution mechanisms tend to be such where, it's a buy and hold, and fund mein jo ho raha hai, let that happen, right? People aren't churning fund after fund. There'll be a liquid allocation. There'll be maybe an alternate allocation if that's available, maybe a balance, and then, large cap, mid cap combination. And then that kind of stays, right? So I know I'm running a bit over, but I think just very quickly to summarize, I overburnt the Maggie. Is education is important, the delivery mechanism, there are multiple stakeholders, and risk management in terms of not only doing it ourselves as manufacturers, but being able to deliver that to the end investor or through the intermediary is extremely important and needs a high degree of education, and hence regulatory or industry support is absolutely key.
Any other perspective on risk or regulation?
Reality, Manoj, of the returns, the longevity of the fund manager which is offering the strategy, pretty much the things which are seen over here, I think that is something which cannot be ignored. Because what typically happens, not just with global investing, in general, I'm just sharing an observation, when there is a fad or a fetish, certain of these hygiene check marks are conveniently ignored. So I think that's very important from a risk management perspective.
So another thing I want to understand is there are a lot of fintechs coming into the space, and fintechs are working like a glue, which is connecting so many different kind of players together. How do you see asset managers and wealth managers kind of working with fintechs, either for digitization or for product or for better customer experience or for better algorithms, better risk management? What has been your experience in working with fintechs?
I'm happy to sort of kickstart that. Just 1 second. And I think this is probably a very interesting question, the meaty topic in general. I mean, I think today probably mutual fund transactions about I think almost 80-85%, and probably my co-panelists will have more accurate data. Who particularly in times of COVID have gone digital, have gone online, just by the reason why that happened is because there was no much alternative, because the markets are open and people wanted to invest. But secondly, also the fintechs and the distribution engines within that, or the subsegment which focuses on that, have certainly helped increase their adoption manyfold. So to a certain extent, the fintechs have been certainly kind of helpful in increasing the digital participation within the distribution of asset management product, not just global but more generally as well. Is the first point. The second thing I would say is that overall, from an equity market standpoint, at the moment, if you look at fintechs more broadly, they are also in some sense challenging the traditional business model, the brick and mortar business model of do we need that many sort of branches, or do we need that many physical frontiers to really operate from? That's something to be aware of. I think the jury is out on that one. I think it will eventually be a mix between the two, but the world will probably evolve more towards fintech from where it is, which is currently a lot more brick and mortar. That is the second dimension to the answer that you asked, at how are fintechs changing the overall stuff. And the third thing, I think, yes, in pockets, there are disruption, which the fintechs are causing, which we have to be mindful about. Asset management companies in terms of the way we hire, the distribution or the distribution landscape, particularly in the asset management context, not just asset management, in the whole value chain, has to be rethought of in the increasingly digital world. So those would be the 3 or 4 pointers that I would probably kind of highlight how fintechs, which are here to stay with, are changing the ecosystem overall. Thank you.
Okay, thank you so much.
Yeah, Manoj, I believe fintechs are an integral part of the financial management, more so on the asset management side. With so many fintechs aggregators coming in, they are only broad-basing the market, bringing in new set of investors. And we as an AMC are working very, very closely with them in terms of making sure that the right kind of strategies are being, propagated through their platform. Additionally, we have our own digital assets. So I believe the time has come. And frankly speaking, when we speak about mutual fund investors, what they look is the ease and convenience through which they can transact. And to that extent, fintechs are offering a great service, so at virtually no cost. So we believe that fintech will only keep on growing from here onward. While some of them have gone all across the country, there are many more which are coming in, and this is something which is irreversible. And as an asset managers and across the industry, we need to work very closely with them in terms of making sure that all those unaddressed section of the society are being addressed through these fintechs.
Okay, thank you, Amit. Lakshmi, I want you to take up one particular angle of this, and that is the women investors. How do you see them evolving into this space, into the mutual fund space, and then into the global opportunity space in India?
So firstly, Manoj, my own thought process has been that investment is gender agnostic. Unfortunately, there is this good section of our fraternity, and the women folk actually rely a lot on their family counterparts, especially the males, to actually take the bulk of the decisions as far as investments are concerned. That is slowly but steadily changing, and why I say that is when I meet a lot of investors across different geographies across the country, and do women dedicated webinars or seminars as well. I see this innate urge is the right word, to understand more of how things are panning out and what's in it for them, and how can they feel more empowered if they are part of this entire financial journey. So I think it is a very, very encouraging sign, and I strongly believe that women have to be part of this entire activity, whether it's wealth creation, whether it is wealth stability. We recently saw one of the IPO listing, how a woman entrepreneur actually moved in from an employee to an entrepreneur. She happened to be one of the colleagues that I worked with. But the point I'm trying to say is that it's an integral, what oxygen is to breathing. I believe financial involvement has to be to women. So you have to start getting involved sooner than later, because you know what happens when there is oxygen deficiency. As I said, the good news is that women are asking the right kind of questions. Again, I would not really categorize between India, investments India vis-a-vis investments abroad. The key is that financial inclusion need has to be felt, and then we are seeing that kind of participation come along. We can get better, no doubt about it. So there is no room for complacency as yet.
And do the number of women investors in mutual funds, does that reflect, is that going at least the same as the overall growth in number of investors overall?
So I have not tracked those numbers. If Amit or Trideep have those numbers handy, they can share. But honestly, I have not tracked those numbers. But my guess is that the numbers are steadily growing. Because the number of calls I get from my aunt and my lady, friends who are not part of the financial fraternity, and to some extent, alluding to your earlier point, fintechs have acted as a very strong catalyst to accelerate this cause, and manufacturers like mutual funds have to look at fintechs as very, very able partners to complement them and take them on to the next level, rather than looking at them as competitors.
Okay, that's interesting. So one thing we can do is have everyone make their final comments, unless someone wants to raise a question, because none of you have really raised a question to each other. If anyone wants to.
Maybe I'd just like to share an observation, if that's okay, Manoj. So, with your point of question on fintechs, of course, very heartening to hear all the panelists saying that how fintech is here and needs to, you need to work with them, because we are a technology company in the financial services space, right? And of course, fintech gets used a little loosely, but there's KYC tech, there's reg tech, there's insure tech, and there's invest tech, right? And I think in all these segments, and we've seen that through our discussions with some partners, big and small, where while the platform is a great, easy plug and play, it extends into a discussion saying, hey, can you do that for us for our domestic business as well, right? So technology has a super role to play, and we do see that, and it's very heartening to see how this is being accepted. And also, I think with respect to women in finance, right, they are certainly a larger contributor in the workforce, and we do see that. So in our space, which is dollarized investing, we do see a very healthy participation of the lady of the house, of the daughters, being part of the investment decision in terms of allocation. And we've not really felt the need to, design the product a little differently to cater to, a lady versus a man, right? And the reality is, if I think back again, right? I think if I look at my mom or any of her friends or even my wife for that matter, they've run households on limited budgets, managed to save, ensure there's enough money for a holiday or a birthday treat and stuff like that. They're fantastic at managing money, right? And it is heartening to see them being more active players in the space, either from a product development, product delivery, or even from a consumer perspective. So, and I guess given the time, it's been fantastic to hear from co-panelists. I do recognize the fact that, we are in a way competing behind the same investment dollar or rupiah there is, but the market is large enough, and, it's not a one shoe fits all clearly. So, very happy to get insights and be part of this panel. So thank you.
Thank you much.
Yeah, so Manoj, in my own, Bollywood style statement, I think this financial marketplace is a confluence of, all Suryavanshi, Sangram Singh and Singham, where, all three can coexist, whether it's Indian investing, whether it's offshore investing, whether it's passive investing across these asset classes, or for that matter, whether it is doing it through the fintech mode or the plain Jane mutual fund mode. So I think there is clear, the word here is coexistence. A healthy competition is, of course, more than welcome, but I think partnering and trying to complement each other over one's strength over weaknesses, I think will make this entire, big picture a happy ending.
I would probably chime in with by saying that overall, the global investing adoption would be a bit like what we saw the mobile adoption in India, where, as compared to other emerging markets, the pace, we started late, but overall the hockey stick of the pace at which it increased was significant, particularly in 2000 to 2010, in that particular time frame. I think while global investing is just about starting and becoming meaningful, the J curve lies right about in front of us, and it is an interesting investment opportunity. Apart from all the diversification that we talked about in this panel. Finally, I think it was a fantastic discussion. Really enjoyed the rich confluence of all the points from all the panelists. Thank you for having me.
Thank you so much.
Yeah, I would like to chip in out here. So, first of all, I believe there are humongous opportunity in the country rather than speaking about the opportunities abroad. Or if you look at the financialization in our country, still it is very, very nascent. Looking at the opportunity, and when we compare ourselves with the global peer, in most of the countries when we track, the asset manager AUMs are equivalent or more than the banking AUM. And in some of the developed countries, when we speak about US, which is the epicenter and the reference point, the asset management industry is as big as the market capitalization of that particular country at $22-23 trillion, and the market cap also is that number. So when we look at India, Indian asset management industry, as Lakshmi mentioned, is just south of 40 trillion rupees. When we look at the banking industry, it is 150 trillion rupee. Not to mention about the the Indian GDP, which is at 210 trillion or 220 trillion. So this is the opportunity what we have. There is enough and more space for each of the player, and I believe what we need to do at this point of time is to inculcate the habit of investment, because still a large section of the society is investing into traditional products. They are hardly able to beat inflation, and this is something we need to do. As investment strategy picks up, as people get evolved, I believe they will try to diversify, going either abroad and not only into the equity asset side, but even there are so many other opportunities, say REIT or InvIT, or maybe for that matter on the debt side. So the need of the hour at this juncture is to keep on educating, I believe, whatever we as an industry player are doing in terms of broad basing, and that is something we need to do, and bring as many investors to asset management fold is something which is the need of the hour.
Absolutely right. In fact, while a lot of people say that traditional savings barely meets inflation or kind of matches or something, there are many individuals who actually lose money because they saved incorrectly in gold, in property, in a savings account which yields 2 or 3% or whatever it is. So the traditional best of tradition kind of matches the inflation rate, but inflation rate also does not accurately reflect the cost of living. Many things our necessities are becoming even more expensive. And
So Manoj, that trend is changing gradually. While we Indians, if we take at say 15% kind of a ballpark number of the GDP as Indian household saving, we Indians are saving at least $450 billion kind of a money every year. Most of that up till now was going into tangible assets like gold or real estate, and we are seeing some bit of early sign of financialization. I believe this is something which will keep on picking up, and there is humongous opportunity in terms of making sure that we are putting up a right kind of a strategy, right product to these investors, and making sure that whatever investment goals which these investors have, we should be able to provide that.
Thank you. And
so yeah, just a last point here, just to from my side is that the aim of an equity investment is to be a shareholder in a good company, and the good companies can come from India and they can come from overseas as well. And today we have the funds, we have the vehicles, we have fintechs, we have direct investment channels through the funds. We can explore all that, and I think this is a happy time to be alive when you can actually participate in so many companies. You can participate in all these innovators as well. And I think this is a brilliant time to be as an investor, equity investor particularly. Yes. Generally, what happens is that when it comes to overseas investing, generally the momentum gets sold. It's very difficult to sell anything else other than your momentum, and I think that will continue to happen in some form or the other. But I think apart from an investment point of view, I think this is a brilliant time, given that the channels are open now.
I wouldn't be surprised if all of you agree with each other on all the various points that have been said. Thank you. Thank you very much for this very wonderful discussion. And hoping to connect with you again.
Thanks. Good evening.
Lovely to be here.
Bye, everyone.
Thank you. Bye-bye.
Bye-bye.